Flynn, what's going on with those commodities, Phil Flynn?
Fragile commodities. That's our fragile economy right now is bringing back the price of gold right now. Peter Schiff is probably shaking in his seat right now because Ben Bernanke said that the inflation is not a pressing problem right now. Well, guess what? As expected, Ben Bernanke really tried to downplay all the enthusiasm that we saw from the better-than-expected jobs number last week and said, hey, hold on a second. Right now, this economy is still very fragile. Don't get ahead of yourself right now. That did give a big boost to the gold market, which was down over $20 right now. It's only down $10 right now. We also saw a shift in the interest rate futures, as well as some of that expectations about a quicker than expected interest rate increase are being backed off a little bit. So another wild swing, Liz and Dave here. They were living and dying on every word from the Fed chairman right now, and a lot of movement here, and it's not over yet.
Phil, is there a specific thing that you think the traders heard in Ben Bernanke's speech that made gold reverse? Okay, so if at some point we do start to see interest rates get tightened, wouldn't that be, I guess, gold negative and dollar positive?
Absolutely it would be. But I think that the message that traders got out of the total speech was that interest rates probably aren't going to be going up anytime soon, that the economy is still very fragile, and he's not worried about inflation. So the traders that got back out of that carry trade are going to get back into that trade, because with that kind of a backdrop to all of his comments, there's really nothing that is going to change that dramatically. So listen, hey, if rates come up sooner than the market expects, we're going to see this place absolutely explode. But based off those comments, traders don't believe it's going to happen quite as fast as we thought after the market closed on Friday.
Okay. Thanks, Phil.
Phil, stay right there, though. Has the bubble burst on gold, or just taking a pause that refreshes?
Let's bring an all-star panel in with us. Joining us are the aforementioned Peter Schiff, president of Euro Pacific Capital, and our own Sandra Smith as well. Well, Peter, we were talking to you and your brother last week, and MarketWatch blames the gold bulls for indeed this drop in price in gold, saying you guys had talked it up too much. Do you agree or disagree with that?
I don't think it's been talked up enough. I think gold's still too cheap. It's not a bubble at all. There's nothing to pop. It's a bull market, and there's a lot of reasons for that. But of course, whenever you have a bull market, the biggest moves are to the downside. They're very scary. They flush out the speculators. They keep a lot of people nervous and on the sidelines. They cause people to talk about, is it a bubble? Is it? But people should be buying gold. They should be buying a lot of gold. It's going to go a lot higher for many, many years. And rate hikes are not going to derail it. I mean, if you remember when Greenspan first started raising interest rates in that measured pace, when he lifted rates from 1% up to 5%, gold rose the entire time period. The only way we're going to get gold to respond negatively to higher rates, if we get Bernanke being very aggressive, if he raises interest rates by 100 basis points, 200 basis points, and really goes to tight money, that might temporarily really undermine gold. But I see nothing that says that we're going to get a hawk out of Bernanke. He's a dove.
Okay, we are looking at just 1 week, and of course Friday we saw a pretty significant pullback. But Peter, overall futures for gold have gained 17 out of the past 21 weeks. So the question now arises, short of what we had last week, even before this big fall, which was a weaker dollar, and suddenly now the dollar picks up its head, what will propel gold to the heights that you believe it can actually reach with the backdrop of an economic environment and all that's been out there?
Yeah. Well, remember, gold's not doing anything, right? The price of gold remains the same. It's just the value of paper currencies that's diminished. And what's going to diminish the value of the dollar are all the bailouts, all the stimulus. You know, Barack Obama, I was listening to his comments saying the economy is improving. It's not improving, or the economy is growing. Our problems are growing. The real economy continues to be undermined by these policies. But if you look around the world, look at the buyers for gold. Central banks are no longer sellers, they're buyers. Gold mining companies are no longer selling forward. Individuals are now buying gold and discovering gold as a store of value. So as governments around the world, particularly in the United States, undermine the value of paper currency by printing too much and keeping interest rates too low, gold has to keep rising.
And Sandra, to that very point, in fact, we saw gold down much further. It's still down about $10. It was down a lot more than that earlier today until Bernanke tried to speak in a confident way about the U.S. dollar, and he had exactly the opposite effect.
And that's exactly what sent gold back off at those lows of the session. I know Phil will probably back this up, but I got on the phone during Bernanke's speech, and I was calling traders down the floor. I said, what is going on? Why is gold bouncing back so hard on his words? Two things were consistently pointed out to me from the traders down there. One is that Bernanke said that while we're recovering, we, quote, still have a long way to go. What did that do? That dispelled all those hopes that were out there, or what sent gold down so hard on Friday, that the Federal Reserve would soon be raising interest rates. By saying that, it indicated that that will not be the case, as that was certainly gold positive. And he was extremely optimistic about inflation. Some guys saying he was too optimistic about inflation. At the end of his comments, he actually said that inflation may go down. So not only is this just, gold positive, but most of this is based on U.S. dollar negative.
Peter, do the other metals follow suit, meaning the platinums and the golds of the world? We've certainly seen silver raising its head as well lately, but is it just a gold story here?
No, I mean, silver hasn't even made a new high yet based on where it was last year, but all the metals are going to go up. The price of everything is going to go up. I mean, when Bernanke is saying that inflation isn't a problem, he's lying. Bernanke sees inflation as the solution. His whole policy is to create inflation. That's what the Fed is. It's an engine for inflation. They create inflation, but they try to pretend that it's not a problem. And, to try to pinpoint the movement in gold on what Bernanke says, no one even cares what he says. He's irrelevant with what he says. It's what he does that's relevant. Gold was going to go up anyway. It doesn't matter what he says. Based on what he's doing, yes, we had a big pullback in the price of gold. That means a lot of people around the world are going to want to buy it. I mean, look at the gold that the Bank of India bought, 200 metric tons. Right. There are other central banks. There are huge buyers beneath the market. If there is any meaningful pullback, you got the Chinese that'll come up, you got Brazilians, you got Europeans, you've got all sorts of money that needs to move into gold.
Let's talk, Phil Flynn, about the future of the U.S. dollar, because a lot of us do think that future is an important one and that we shouldn't be doing anything to talk down the dollar at this point. But are futures traders believing that that's what the Fed and the Treasury are doing, talking down the dollar?
I think that Peter makes a good point in the fact that the Fed is trying to create inflation because they think inflation is a better alternative to deflation. So he's absolutely right there. But the bottom line is talking down the dollar. He's been happy with the carry trade because the reason why these banks are able to pay back these big loans right now is because these banks have been making money on the carry trades. So I think the answer to the question is, listen, the bottom line is this is going to be a historic time. If the dollar survives this crisis, then I would have to say that the dollar itself.
Phil, hold on. If the dollar survives, what do you mean? What could happen? What's the worst that could happen to the dollar?
That everybody across the world doesn't accept the dollar as a currency. I mean, that's the worst case scenario. And there have been threats from other countries, such like China and Russia, that say, listen, we're tired of being paid back in printed money.
That is exactly. He made an interesting point about the U.S. dollar, and that was that 1 year ago, when fear was at its height, September of 2008, a year and a couple of months ago, everybody rushed into the dollar. It was still perceived as that sort of last resort of safety, and now they're moving out of it because they're looking for more risk.
And Liz,
more money elsewhere.
And to quote what he said when he spoke to him, he called it a healthy development that the dollar's actually declining. He pointed back to during the financial crisis, he said we saw the dollar rise during that time, and now that it's come down, it's actually a healthy development, and it shows signs of recovery.
Peter's bursting. Go ahead.
I don't think that rally in the dollar in 2008 had to do with the flight to safety.
What did it have to do with that?
It had to do with deleveraging. It had to do with the need to buy back dollars that had been borrowed. But I don't think there's any safety in the dollar at all. I think the reason that so many people are fleeing the dollar is not because they want risk, but because they understand how risky the dollar is and they want out. And I do think that if there is another major financial crisis, it's going to be with the dollar weakening, not the dollar strengthening.
Well, Peter,
in fact, it's the weakening dollar that's going to precipitate.
You've been pretty spot on about the decline in the dollar and the rise in threats and particularly the price of gold. But what should we do to strengthen the dollar? Presume just for the moment that somebody in Treasury cares about a strong dollar. What should we do?
First, to the point about Dubai, yes, when the Dubai crisis hit, there were people who bought the dollar on anticipation that the dollar would strengthen, but it didn't strengthen. It actually weakened, and those speculators lost money. Gold went on and made a new high several days after
but how
the Dubai
do we strengthen the dollar, Peter, quickly?
Hold
on. Peter, how do we strengthen the dollar?
First of all, we have to accept the fact that the dollar is going to have to weaken because of all the mistakes of the past. We have undermined our competitiveness. We have destroyed our manufacturing base. We have encumbered our economy with uncompetitive regulation and taxes that are going to necessitate a lower dollar. But ultimately, if we want to put a floor under the dollar and let the dollar strengthen, what we need to do is reform the Fed. We need higher interest rates that will encourage savings and discourage government and consumer borrowing. Once we have higher interest rates, if we can shrink government so that we can lower taxes and lower regulation, we can be productive again. And if we are productive, if we save and produce, we will then be rewarded with a strengthening currency.
Well,
but right now, everything that we're doing is going to destroy the dollar.
We got to wrap this up. But Sandra, call me of the black helicopter crowd, but I feel like central banks won't let the dollar totally fall. They will intervene. They will, 2 in the morning, start making calls saying, you buy up the dollar to prop it up. And so I'm just wondering, if Peter is not wrong, all of these things, we don't have a manufacturing base anymore at all to speak of, yet the dollar does not totally crash.
But at the end of the day, the word that we're getting from the administration is that they are not trying to help out the dollar right now, and that the dollar's reacting to that. And this isn't just a dollar weak story, Liz and Dave. This is based also on sheer investment demand. John Paulson, big asset houses are still coming up with funds and just now jumping on the gold bandwagon. So this isn't just a weak U.S. dollar story. This is a sheer investment demand.
No, but that's all a part of the weak dollar. The fact that we're flooding the economy with dollars, we have to find something to own because we can't stay in dollars. This is all a function of what the government is doing. And there's nothing the government can do to strengthen the dollar unless they want to abandon all the stimulus, unless they want to raise interest rates, unless they want to bankrupt all the financial entities that they bailed out, unless they want to let the phony economy collapse. They can't do anything about the dollar.
I thought I was on your side here, Peter.
The senatorial candidate from the state of Connecticut, Peter Schiff. Phil Flynn, thank you very much. And Sandra Smith, great to see you all.
Okay, good discussion there. Thanks.
Well, Fed